Good morning, everybody. Hope we're doing really good today. Welcome back to the channel. When people buy a company like AT&T, they buy shares of this probably because they want this really big yield. It has a really high yield, and the price is relatively stable. It has a low beta of 0.74, which means that for every dollar the S&P 500 moves, the AT&T will move 74 cents. So it's less volatile than the S&P 500. Its yield is 6.64%, and it's actually the highest dividend, that has the highest yield of any dividend aristocrat. A dividend aristocrat is a company that has been paying a dividend and increasing that dividend for 25 consecutive years. But AT&T has not announced a dividend increase for the past 6 quarters, and people are starting to get worried that with this huge debt load that it may lose its dividend aristocrat status. And AT&T does have a huge amount of debt. It's actually like one of the most indebted companies in the world. And so we're going to talk about this a little bit in this video. If this dividend is safe, are they going to have to cut this dividend to manage this ginormous debt load? Or are we expecting a dividend increase anytime soon? If you're new to the channel, I'm Justin. I like to talk about dividend investing, income from options, financial independence, and document my own journey towards financial independence, building wealth. So really appreciate it if you give me a little like for this video, and then subscribe to the channel if you haven't. I'd really appreciate that a lot. Right now, AT&T is paying out a dividend of 52 cents a quarter. And it's been paying that same dividend for 6 quarters since the beginning of 2020. And that doesn't automatically mean that it loses its dividend aristocratic status, because like the rules of a dividend aristocrat is calendar year. So in 2019, AT&T paid out $2.04 for the year. And in 2020, AT&T paid out $2.08. So that dividend is increasing from 2019 and 2020. So AT&T, all they have to do is in the 4th quarter of this year, increase their dividend by 1 penny, so that 2021's payout will be $2.09, and they maintain that dividend aristocratic status. Being a dividend aristocrat is something that investors take a lot of pride in investing. They care about dividend aristocrats. But a company like AT&T may not care about this made-up title or award that people put on them for how long they've been paying its dividend. They just released their earnings, and it was all good, but they did mention their dividends and their capital allocation for 2021. And all these slides will be on the investor relations page for AT&T if you want to look at it. And so their plan for how they want to spend their capital going forward, one of their big priorities will be investing in 5G and then laying fiber, which is like the fiber optics to connect all the houses to the 5G and connecting the internet, and then HBO Max. And we all know that. We know the 5G is a big deal, and we know that HBO Max is a 5 deal. And as far as the dividend, they stated, committed to sustaining dividend at current levels. Now, that's good news because they said they're committed to keeping the dividend, and they have no plans to cut it. But it's also, they may not care much about raising the dividend in the future. And then another priority is utilizing cash after dividends to reduce debt. And that's really important because, like I said, they have like $170 billion in debt, and it's some of the most debt that any company's ever had. So you want to get that under control. And continued portfolio review, restructuring non-core assets. that means selling off things that aren't working or things they don't want or need to raise cash to pay off that debt. Everyone's pretty happy with their earnings reports, and all their numbers are up. The revenue's up and the earnings are up. Revenue is up $43.9 billion this quarter versus $42.8 billion first quarter of last year. Earnings per share are up 2 cents from a year ago to 88 cents. But the really good numbers are cash from operations. Those are up $1 billion to $9.9 billion. And free cash flow is almost $6 billion. So if their dividend payout is $3.7 billion a quarter, that gives them a payout ratio of 63% for this quarter. Now, it seems that the dividend is really safe right now. And they have room to raise that dividend if they wanted. If they wanted to raise that by a penny in the fourth quarter, they could do that and keep their dividend aristocrat status. But they may want to focus on paying down that debt instead. When people criticize AT&T, they have two things to say. They talk about the ginormous debt load and DirecTV. DirecTV's been losing customers forever, and and in 2018, AT&T had $171 billion in net debt. Net debt is debt subtract cash and cash equivalents. And they've been doing a really good job paying off this debt, and they got it down to $148 billion last quarter, but this quarter it's back up. And they had to take out $23 billion to finance C-band. And the C-band financing is the 5G radio waves, like the spectrum, the radio wave spectrum that they need to do 5G, that these are transmitted on. So now we have $169 billion in net debt, but they expect to reduce that to $154 by the end of the year by selling off DirecTV and Crunchyroll. And they expect to get $9 billion from that. And this Crunchyroll is like an anime streaming service. So they want to sell that off. Few positive notes about this debt is most of it is fixed rate. 90% of the debt is fixed rate, has a long maturity of 16 years. So on average, all this debt added up, you don't have to pay it off for 16 years. And the interest rate is pretty low at 3.8%. And that's not too bad. And this net debt to EBITDA ratio is 3.1 right now. And they want to get that down to 2.5. And, according to Investopedia, a bad net debt to EBITDA ratio would be 4 or 5, and that's when things get a little troublesome and worrisome. Revenue is up for the Time Warner, with advertising up now that everything's coming back to normal. We have more sporting events and more advertising on sporting events, and then cinemas look like they're opening up again, so they expect more cinema, more movie revenue in the cinemas in 2021. I personally think that AT&T's dividend is safe right now, and I don't expect they will need to cut the dividend anytime soon. It does have a really high yield, and it seems to be safe, and there is the possibility that AT&T will increase the dividend a smidgen to maintain that aristocrat status, but I'm not getting worked up over if they increase that dividend the penny or not. They have a really good yield, and they have enough free cash flow, a low payout ratio where there's money left over where they can handle these big projects like building out the 5G infrastructure, HBO Max, and then paying down this ginormous truckload of debt that they have. They can also sell off, unwanted assets on the balance sheet to help pay off this debt. I'm not worried about if they don't increase the dividend if they, as long as they maintain the dividend. I think it's a great company. I think that, it's a title. It doesn't really mean anything. It's like a badge of honor, but it's not going to affect how much. Just having this badge isn't going to affect the price returns in the future. I personally not invested in AT&T, but I don't have anything against it, and I would, but I have my money set aside on a couple other different positions I want to build out. But yeah, go ahead and leave a comment down below if you've been losing sleep about AT&T, that it hasn't raised its dividend in 6 quarters, and if you expect them to raise their dividend any day now. If you get anything useful out of this video, I'd really appreciate a thumbs up. Make that little thumb thing look blue. Subscribe to the channel if you haven't. And then I'll put some other videos somewhere that you can watch. And I want you to go have a good day, alright? Justin out.